Okay. Okay, so this is going to go through like the reports that you have access to and the reports that are sent to you when you have a closing that Hillary sends you.
Okay, cool.
Okay, so first, I am not an accountant or a financial advisor, so if you need professional advice, please seek out one of them.
Gotcha.
Okay, so first, in a website called mykw.kw.com, it's the same login credentials as Command, is where you can find the reports that I'm going to talk about first. So
Okay.
this is what the page looks like when you log in, and then up in the top left corner, there is a button here that says reports. Then it will load this screen and you're going to go to the reports tab and then associate. And the first report I'm going to show you is called your multi-year trends. So this is what it looks like, except for it's many pages long. It basically shows you different categories and the value for that category of each month of each year that you've been with KW. And then it tells you your month over month change and your year over year change. So
Okay.
zoom in a bit. If we look at the closed units of this one, you can see, like, let's look at June, for example. This person in 2021 of June, they closed 5 units. Then in 2022, they closed 2 units. So you can see the month over month change is a -60 because it's comparing June to June.
Right.
And then the next month is 3.8 units, so they went up 87%. And so it tells you your total for the year. And then there's, like I said, a whole bunch of different categories. I zoomed in on the ones people seem to care about the most. But these are the categories that you will find in your multi-year trends. So when we talk about building a budget, knowing your numbers, the multi-year trends is by far the most helpful report you can use to learn your numbers. Okay, so it's all your numbers in there. Another report that people like is the monthly production summary. So you find it in the same place as the multi-year trends. And it's sort of the same thing, just kind of in a different view. But I just like to highlight this one because people do like this report. Now we're moving on to an EFT. So this is what you receive when you have a closing and when it gets paid out. So an EFT stands for electronic funds transfer. So this means that it's going directly into your bank account. The alternative would be to print a check, which obviously nobody wants. So the EFT is essentially your check, just electronic version. So I zoom in on the next page to show you the breakdowns. So everybody's is going to be different. Everyone has different things held off their commissions, different percentages, things like that. So the top number to focus on is your gross earnings. So in other words, that's what we call your GCI, your gross commission income. So on this transaction, the gross commission income was $9,112.50. Then we're going to take off royalty. So that is 6% up to $3,000 a year for everybody. That's the money that goes to KW Canada and KWRI. So you pay $3,000 a year. Then we have your split, which is also called company dollar. So that's the money that your local franchise uses to run the company. So we collect a split off of the commissions to pay all of our transactions, and then what's left over is what ends up profit shared out at the end of the month. So splits can change depending on your production level. Everyone has a cap of 20,000 if you're an individual agent and 10,000 if you're on a team. But so the percentage can change, but the cap amount is always the same. And then this person contributes to Kindness Works. So you can see the $10 deduction here. And then they're paid HST. Because you're a business, you are collecting HST. So the HST is paid there. And so then this final number, the net pay, the $6,696.81 is what got deposited into their bank account. Is there any questions on that?
Nope.
No? All right. Kelly, a few more people did join. You're not alone anymore.
Okay, good. Thank you.
So here's another example. This is a different person's EFT. So you can see this one looks different. So again, we start with the gross earnings or the GCI, but this person is capped. So they no longer owe a split. And when you're capped, you do pay a $150 transaction fee, but only when you're capped. So there is no royalty coming off and there's no split coming off because they've paid in their max amount so far for the year. So they pay the $150 transaction fee instead. They're also contributing to $10 to Kindness Works, also paid HST, and then their net pay. And then this one is different again. So we have the gross commission at the top. The royalty, you may or may not notice that this is not 6%. That would mean that this person capped on the royalty on this transaction. So they only owed another $139.60 to hit their $3,000. So that's all it took instead of 6%. And then their 30% split. They're also contributing to Kindness Works. Now this one's new, an income tax deduction. So the office does offer to hold income tax for you if you want us to. It's essentially like a forced savings plan. You tell me what percentage you want to put aside, can be any percentage you want. You typically ranges from 15 to 35% depending on your taxes. I can't tell you the amount. But so if you want that held, you see it comes directly off. Basically, I hold it in our bank account. When you want it, you ask me for it and I send it to you. It's just so you're not tempted to spend the money and you're forced to save it so you actually have money to pay CRA when that time comes. Same thing with HST. We can also hold your HST. So you can see this on this EFT. We're paying them $1,396 of HST, but then we're also taking it right back off and not actually giving it to them. So these two kind of cancel each other out. So they did earn $1,400 in HST, but we didn't give it to them. I'm holding it in our account. Any questions on that? Yeah.
Yeah, does it vary by the commission come up?
No. So the question was, does the cap fee change? So that was back on this one. The cap fee is $150 no matter what. Yeah. And so that's only when you're capped. So you're either paying a split or a cap fee, never both. All right, so the next page, Hillary also sends this to you upon closing. It's also called a trade record sheet, which can be a little bit annoying, but it's the one that's generated directly out of Lone Wolf, which is the accounting software that we use. So this is what it looks like, but I'll zoom in on the important stuff. So it gives you a little bit more detail, but it is very similar to the EFT. So you can see here, the sale price of this transaction. You can see any trust details up here. So you can see on this transaction, the listing commission was 2%, which is $13,500. The selling commission, which makes more sense to say buying commission, was also 2%, which is also $13,500, which is a subtotal of $27,000 plus HST, a total of $31,000. So when we invoice the listing lawyer, this is similar to what our invoice would look like, except for we would deduct the $5,000 that we're already holding for the trust deposit. So then you can see our expenses. This transaction must have been a Sutton agent on the buying side. So it was our listing. So we invoice for the full amount. But then we owe Sutton the selling side because it was their agent, right? So you can see half of the $31,000 is going to Sutton. So then if we come down here, this part is very similar to the EFT. So we start out with the gross commission, the $13,500, same number as up here. Then we have the split coming off. This person has income tax being held. They're contributing $10 to Kindness Works and their royalty amount. But like I said, they capped on royalty on this one. So it's not the full 6% because they hit the cap. So it doesn't include HST on this portion, but you can see this number here, the $5,925 is also right here. And then you'll see here the HST that $1,400. So it's a little bit different, a little more detailed, but essentially the same thing as the EFT. Any questions about this? Oh, I see something in the chat. If there's a referral, is it just an additional deduction line? So if there's a referral, you would see it under the expense portion. So if there was a referral owed on the listing side on this transaction, you would see Sutton Group and then the full 13,500 for the buying side. And then you would also see let's say like KW in Ontario, if that's where you owed the referral. And then there would be a dollar amount right here of what was coming off, whatever that amount may be. So then your gross commission here would no longer be 13,500. It would be 13,500 less whatever the referral amount was. Does that make sense? I'll take silence as a yes. All right, so this document, okay, perfect. This document I send out to you guys quarterly. So this is called the tax worksheet. And this is to help you file and pay your HST. So it gives you at the top is a summary of your transactions for the quarter. So you can see here from April 1st to June 30th. So that is Q2. Most people file their HST quarterly. That's why I send this out quarterly. So it gives you a summary of your transactions at the top. So it tells you here your gross commission and then what was deducted off of each of these commissions, what was taxable, so what was left over that you earned HST on, and then how much HST you earned is in this column here. Then the bottom half of the page is your expenses that went through KW for the same quarter. And the important part is how much HST you paid on those expenses. So in Q2 of 2023, this person earned nearly $4,000 of HST, and they paid through KW $28.51. That leaves them owing $3,944.50. Now, you have expenses that happen outside of KW. I don't know how much money you spent on gas or your NSAR fees or anything like that. Listing photos, whatever. Anything that happens outside of KW, I obviously cannot include on this. So this is to get you started, but then there is other HST you would have paid throughout the quarter that can also be deducted. Does that make sense? Okay. This sheet here, I send out annually with your T4A. So this is to help you file your income tax. So the last one was for HST. This one is for income tax. So I only send it out at the end of the year because you file income tax annually. So we start out, the very top line is your gross commission for each month with your total being at the end. So this number right here is the same number that's going to be on your T4A. That's your gross commission. That's how much money came in. However, then you have deductions that came off. So this is your split, your cap fees that were paid, your donations to Kindness Works, royalty, all of that kind of stuff. So your top is your gross commission. This middle piece here that's called fees is your cost of sales. So these fees only exist if you have a closing. If you don't have any closings, you don't owe a split, you don't owe royalty, etc. So this middle chunk is your cost of sales. And the bottom chunk is your expenses. Again, only the expenses that happen through KW. These are your operating expenses. So these fees are owed whether or not you have a closing. Does everyone understand the difference between cost of sales and operating expenses? Yeah. Okay. So if we just focus on the total column, we started out, this person made 98,000, let's say 100,000 because it's easier. Then their fees came off of those transactions, leaving them with 60,000. And then they paid expenses, leaving them with 58,000. So that kind of sucks. But that's the reality of owning a business. But so this statement really helps you with your income tax. This number is going to match your T4A, but then you have a whole bunch of expenses to deduct, because just because your gross commission was 100,000 does not mean you got 100,000, as this clearly shows. Okay. Any questions about this one? No? All right. So I think that's the end. Yeah, that's the end. I will say these last two reports, your tax worksheet and your annual financial statement, just forward those to your accountant. Okay. When you get these, if your accountant's doing your HST or your income tax, just forward these off to your accountant. It's going to help them. I often get asked, I lost my May expense statement. Can you resend it to me? I'm like, no, just use this. This has the whole year rather than 12 different expense statements. This is all on here, right? That's all they need. They don't need it super detailed like the expense statements are saying. This is your courier fee for 123 Main Street. That doesn't matter for income tax. This is telling you all the expenses in general. Okay. Any questions?
There may be more for the recording than the new agents. The question that I've gotten is, do I have to register for HST if I'm making under 30,000?
Okay, so the question was, do you have to register for an HST number if you're making under 30,000? The official answer is no, but I would say yes. Why is your goal to make less than 30,000? Just plan to be successful. And so if that's the case, then if you get an HST number halfway through the year, you got paid HST on some and not all, it's just a mess. It is so much better if you just get one from the beginning, and you shouldn't be here if your goal is to make less than 30,000, right?
And as soon as you have an HST number, we have to find HST.
Yeah. Yeah.
Regardless.
And plus, once you have an HST number, then you can claim HST on expenses that you're paying HST on. You're paying HST on every single expense that you're incurring, so you might as well be able to claim it. Even if you are making less than 30,000, then it's going to help you.
You can't do
Right?
that.
Right. Yeah. You cannot claim HST if you don't have an HST number. So even if you made $0, every ounce of HST you spent on your business, you can claim it and get it back. Right? So the official answer is no, you don't need one, but please get one.
Doesn't cost you to-
No, it's free to get one. It doesn't hurt you in any way. Any other questions? No? Okay. Well, that's all that I had. That's very short. Yeah.
Let's say if you are a corporation, like you have a corporation license and you also had personal
Yeah.
real estate business. That same HST number could be used for.
So the question was, if you're incorporated, do you use the same HST number?
Yeah.
And the answer is no. You have to get a new HST number when you incorporate your business. And you should 1,000% have an accountant. You should have an accountant regardless, but if you're incorporating, you 1,000% need an accountant who will help you guide you through all of that. All right. Well, if there's no more questions, that's all that I had. Thanks for joining.
Thanks, Erin.
Welcome.